Well, good evening, all. Ira Epstein, and yes, I am back from vacation, and I said that I'd be back and probably try to do something Sunday, and here I am. So I've lived up to it. It is August 3rd, 2025. It's about 6:35 p.m. Central Time, and this is your Financial Market Weekly edition of the update. I must tell you, if you ask any of my subscribers that get my morning paid-for videos and newsletter, I didn't miss a beat. You missed me here. This is the freebie part. I'm not in my studio. Could have done a few, but I just decided I'll take that time off, get a little color, and enjoy myself for what it's all about. Now, my take on the markets was pretty simple. It was the buy the rumor, sell the facts. You can't disagree with that so far. You were buying the rumor of what tariffs would be. Once they were all known, the market gave you the correction on Friday. Whether that correction is lasting, time will tell us. Very quickly, we're going to get a feel for it. But a 1 week break on the charts doesn't spell a lot. What bothers me is you lost the bullish momentum in many of the markets, and I think these have been momentum trades, and if that stays lost by Friday, well, between now and then, you might even sink to the 18-week average of closes in a number of markets. So that's where I'm at on that part. As for the U.S. jobs report, well, you saw the big revisionments downward. But in fairness, you always get revisionments. I mean, what is so new about this? So the president fired, and he has the right to do that, the head of the data keeping for this, the statistics, and he'll put somebody else in. Unless they fudge the numbers are the numbers. Will they still need fudging? Yeah, it's the method of collecting that the government does. Maybe they can come up with a better way of doing that. Maybe we won't have to also go into a March grandiose number where they make major changes. All that is possible. We'll see where this leads us. But you can't get away from the fact that less jobs were created than we all thought. It pissed the president off, and he fired the head of that agency. Okay. That doesn't change the fact that we had a wobble. The market's saying, well, that wobble gives the Fed reason to get ahead of the curve and start cutting rates. That's where the market's at right now. That can all be negated if you get a strong set of numbers for August, and we'll see those in September, right? That's basically how you have to deal with it. We'll see if that comes about. In terms of data, let's get to that for you. You're going to get the factory orders data for June at 9 in the morning. They're looking for a decline in June of 4.6% from the rise in May of 8.2%. And we had fewer rig counts. We lost 2, and we're about 46 below a year ago at this time. All right. So why don't we just go and take a look at the charts? There's nothing bearish on a monthly chart here. The market came up, and you're getting a correction. Okay. So for the month, and that's what we should look at, here is how you finished July 31st, and here's where you're at right now. So I want to come back to that. You finished off July with a gain of 1.93%. Now you're losing a little bit. Okay, doesn't prove anything to me. You broke down a bit in the weekly chart of closes, all righty, you're coming off there, and you had a huge reversal on the chart pattern on Friday, well, last week. That culminated on Friday with the market closing near the low of those numbers. Now, that would have an impact potentially on how the slow stochastic readings were looking. We'll get to that. Did it change anything on the picture? Well, the last break low in the market was 41? Oh, 62.41, I'm sorry. 62.41. We haven't yet taken that out. But you did some damage by having the outside week down. If the market loses everything, when I say loses, all of its momentum, maybe 59.71 takes place. You have to lose the momentum, though. And you really haven't hit the Bollinger Band for weeks on end. Not a week, weeks, plural, on end. So what about momentum? This is what I'd be looking at. You have not lost the bullish embedded reading. Therefore, until it's lost, I think the pros will take stabs at the market until they see this get under the 79 level. Now, if we were to end the week down and again a week where you were near the bottom of this week, that would be, even if you were embedded, a very bearish sign because the momentum would catch up with that over time. We're not there at this point. Remember, when you measure stochastics, you're looking at the switchover of a 3 and a 5, the 3-week versus the 5-week. So you got to start weighing that. Always pay attention. In the Dow, you can't argue that you've got really a triple top up in this market. Other analysts might argue that. I don't. 1, 2, 3. You weren't able to get by it by much, and boom, right back down. So not very good action and losing the bullish embedded reading, which often means before you take out this high that you made last week, you make a run at the 18-week average of closes. In the NASDAQ, you're still with the embedded reading. You got through those old highs, a very different looking chart, but don't fight the fact that the market slipped back. Until you lose the embedded reading, traders will look at this as a buying opportunity on the weekly. Now, if you look at the daily, you're down to Bollinger Band bottoms. A whole different thing. You know, when you talk weekly, you're talking monster risk if you're going to just trade off a weekly chart. And I like to filter the daily and the weekly together back and forth. But everybody has their own technique. Until the markets are under the 18-day average of closes and all the stock indices on the weekly chart, the overall pattern is still one of bullishness. So I can see the correction. I can make an argument in the Russell 2107 to 2087. You've never gone back to challenge the high. The Dow did, but not this market. And the S&P and the NASDAQ went through their highs. This is still the weakest of all the indices. When we get to the DAX, you lost the bullish embedded reading. When you lose a bullish embedded reading, here you were with it, you'll often make a run at the 18-week average. Could do that easily as we get into the market tomorrow. When you look at the 30-year bonds, you have a lower low, a higher high. I think it's going to have problems at the 117.11 zone, which is the 100-day average. And up there towards it, you probably have the Bollinger top that you got to pay attention to as well at 116.5. So that's what I'm looking for there as resistance. On the 10-year notes, it's right here at 112.11 and a half. You're literally at the resistance point. This market has been stuck for the longest period of time, 2 months, between the 100-week average in green to the upper Bollinger Band, just back and forth, and it is very overbought. In the dollar index, it's been so far on a weekly chart a bear market rally and no more than that. The daily's got a different picture than this. And that, you know, I like when they come together because until they do, you're going like this. What does this all mean? When we step at the euro, the break was no more than a pullback in a market that's overall bullish. You haven't been able to close under the 18-week average of closes. In the Canadian dollar, you're fighting your battle right at the 100-week and the 18-week. You lost your bullish momentum, and when you did so, it called for this break from over here, and it took place. Now the market has to decide what is the next move. This is a really important week for the market to make some decisions. Look where the Japanese yen stopped. If you follow my teachings, the first challenge of a Bollinger Band is often where pros take money off the table on the upside or downside. So if they were bearish, that's what I think. You also had the 100-week average. You're getting a bounce from there. Bitcoin, you just lost the bullish embedded reading on the weekly chart. You might be headed back to wherever the 18-week average is. It could be the 105.25 area unless you take out last week's high. The odds of taking that out are not great, so be a bit cautious. The market acts like it wants to pull back. We had this nice rally in Brent WTI that has fallen right back. It didn't stay over that. It was just a test of the numbers. In the Brent itself, you're still in a bull pattern. You have higher lows, higher highs. I'm not keen on the support at 67.79 because to get there, you got to take out the last low of 6,800, which will change the swing line. Then you'd have a higher high and a lower low. So it's got to find support before that. And I can make the same argument in WTI crude. So as friendly as they are, they should not be revisiting those Bollinger Bands because you could be in trouble if you do. Gasoline, will it take out 3 weeks ago's low? If it does, then this looks like it's spent itself, just the way we had the rally here. Be careful. That could be another break coming up as we approach the Labor Day holiday, so you got to be watching all that. So as I'm looking at the markets, I can see early on that I'm expecting whipsaws back and forth in the early evening. Not quite certain what we'll wake up to, because that big break, are you going to find buying on it like I just said or not? That's going to be the interesting part during the evening. For those of you that you heard me say, and maybe I didn't say it here, I did not miss a beat while I was away from my paid subscribers. I was putting out the morning subscriber videos for them all the way through. I was putting out, in terms of my newsletter, wasn't writing about the markets, but I gave them the heads up on what reports are coming out, and I sent the major reports to them as well. So I had a great 2 weeks doing that. But you can't say, if you're a subscriber, that I cut off your information. I did not, and I put out the trades as I saw them, and that was the fun part of it. I cover all this when I do my newsletters, and I'll start again probably tomorrow, not tonight. I'll start tomorrow writing again and getting right into the swing of everything and building up to the normal letter that I do, and that'll take me a day or so to catch up with. But this is what the letter looks like. These are what the charts look like in the subscriber videos. You get access to my special reports. There will be one this week. I'm picking out what I want to do right now. All you need to do to get my research is go to iraepstein.com research. There's icons up here. Give them a click. They'll take you right where you have to go. I'm Ira. Have yourself a great evening. Take care.